So here I am. I can share the screen now. Yesterday, one of your fellow requested me to attempt a question which should contain a format of how to make a meme. Okay. Today we are going to do September 23. And today our agenda is to attempt the question 1 of this paper. And interestingly, the question 1 of this paper contains to write a meme. So if I ask you this question, are we ready to begin our exam? Are we really ready to begin our exam? Thanks, Robat. Others? Thanks, Aisha, Baktawar, Farhan, Amar. Okay. You should assume that today's date is 1st August 2023. You are an ACCA student working from a firm of accountants. Your manager has asked you to carry out a work in relation to a company, Bridge Limited, which is about to acquire a subsidiary, STA Limited, and Ella, who is to be appointed managing director of STA Limited. In addition to some ethical considerations which have been raised by your manager, advice is required in respect of post-tax cost of carrying out research and development, loan interest payable by a company, the release available in respect of a trading loss brought forward by a company, the UK tax resident status of individual, the capital gains tax payable in respect of an asset situated overseas, the inheritance tax payable in respect of a lifetime gift following the death of the donor. 1, 2, 3, 4, 5, 6. 6 and 1 ethical consideration, in total 7. The following exhibits available on the left-hand side of the screen provide the information relevant to the question. Ridge Limited, Corporation Tax Matters, schedule from Luden. Ella, Personal Tax Matters, email from Ella. Work to be carried out, emails from manager. This information should be used to answer the requirements within your chosen response options. Ridge Limited, Corporation Tax Matters. Schedule from Luden, the Managing Director of Ridge Limited. dated 1st August 2023. Background. Ridge Limited has an agreed loan of 1.1 million from a UK bank at annual interest rate of 8% per annum. This loan is to be taken out on 1st October 23 and will be used to finance the following activities. Research into new manufacturing process cost 150,000. Purchase of the whole of ordinary share capital of STA Limited for 950,000. 950, 150, the total is like 1.1. Fine. Okay. Research into new manufacturing process. The project will be carried out by Ridge Limited during the year ended 30th September 24 in order to develop new and more efficient manufacturing process. The budgeted research and development expenditure is set out below. Cost in respect of Ridge Limited employees. Wages, accessible non-cash benefits, work to be carried out by subcontractor, materials. Okay. Yes, Anas, we will be talking about RDEC. Then purchase of ordinary share capital of STA Limited. At present, Ridge Limited has no subsidiaries. On 1st October 23, it will purchase the whole of the ordinary share capital of STA Limited from the individuals who currently own the company. Uh, on 1st October 2023, it will purchase the whole of the ordinary share capital of STA Limited from the individuals who currently own the company. STA Limited prepare accounts to 30th September each year. STA Limited made a tax adjusted trading loss in the year ended. It is expected to have 370,000 of its loss to carry forward as at 1st October 23. So I can sense like there will be some discussion around the restriction of loss, carry forward type of stuff. Yeah, we need to check. So change in ownership, yes. If there is change of activities or revival of negligible activities, then yes, loss cannot be carried forward. Mm, Budgeted profit of Ridge Limited and STA Limit. Ridge Limited taxable total profits for the year ended 30th September 24 and for future years are budgeted to be between 900,000 and 1.1 million per year. Most of these profits are in respect of Ridge Limited trading activities. Okay. STA Limited, sorry. Ridge Limited taxable total profits for the year ending and for future years are budgeted to be between 900 and 1.1. Almost all of these profits are in respect of trading activities. STA Limited. STA Limited tax adjusted trading profit and taxable total profits for the year ending 30th September 24 are budgeted to be 125,000 and 150,000 respectively. However, it is our intention to make some changes to the sources of the company's components and also to look for new markets of the company products in order to increase its profits in the future. Um, Bakhtavar, now this thing refers back to your comment where there is change in ownership. Yes, if it qualifies the last line into the change of activities or revival of negligible activities, loss cannot be carried forward then because change in ownership is there. There is no doubt debate on it. We just need to look, we just need to check for the change in ownership or revival of negligible activities element. So I'm not concluding at the moment. I'm just uh, joining my dots. So Aisha, revival of negligible activities means, for example, if my business activity goes down, approximately my business is about to cease, about to close, I do something to restore my business. That is revival of negligible activity. Um, Amar, you are talking about Ridge Limited or STA Limited? Yeah. So for STA, these are not two profits. One is trading profit, and another one is taxable total profit. So these are two separate things. So for Rick, maybe we need to, I'm not sure. Again, question will decide. requirements will decide. But at the moment for rich, there is rather than any confirm or fixed amount of profit. So this is what I can sense that maybe the conversation there would be if this, then this. And if profit is this amount, then it would be that maybe. Corporation tax refund. Ridge Limited has received an unexpected refund of corporation tax of 6,700 from HMRC in relation to the year ended 30th September 2018. It is likely that refund was made in error. It is likely that refund was made in error. Appointment of Ella as the managing director of STA Limited. Ella will be appointed as managing director of STA Limited. I have suggested to her that you may be able to advise her on her personal tax affairs. Mm, okay. To tax manager from Ella Personal Tax Matters, 1st August 23. Thank you for agreeing to help me with my personal tax affairs. I have agreed to enter into 3-year full-time contract with STA Limited. The contract will commence on 1st October 23, which is also the date on which I will return to live in the UK. My salary from STA Limited will be 7,000 per month and paid monthly in arrears. Okay. Please advise me on the matters set out below. Sale of commercial building. I moved from UK to the country of Buria on 6th April 2020. I have not been back to UK since I left. On 1st May 20, I purchased a commercial building in Buria for 150,000. I am now planning to sell this building for 240,000 on 1st November 23. There is no capital gains tax in Buria such that the sale of building will not give rise to a tax liability there. Any comment on sale of building? Any comment on sale of building? I can see some pointers, relevant pointers over here. So, Bakhtawar, if sold before 1st October 23, then what? Very good, Anas. So, Bakhtawar, referring to your point, if she sold before 1st October 23, then building would be something which is purchased after leaving the UK and sold before coming back to UK. Hence, it will be exempt. If building sold in 1st November 23, then we need to look for temporary non-resident status, and there might be capital gains tax implications on it. Right? Great. Gift from my grandmother. On 1st Feb 18, my grandmother gave me a plot situated in the UK. This plot of land had a market value of 340,000 on that date. However, it was part of much larger site owned by my grandmother, which had a total market value of 980,000 immediately prior to the gift. 2 months later, my grandmother sold the remainder of the site to an unconnected person for 610,000. Sadly, my grandmother died on 1st May 2023. The only gift she made during her life was a gift of 225,000 in cash to my brother on 1st March 2014. So it's like more than 7 years would be exempt, right? More than 7 years to uh, correct. Very good, Bhaktava. Yes, you are right. Work to be carried out. The most important exhibit, like this all is storytelling. Now, what we are supposed to do to be precise. Bridge Limited, what we are supposed to do to be precise. Please carry out the following work. Prepare a memorandum for the client file, which should address the following issues. Post-tax income of planned research. I can confirm that Bridge Limited is a small or medium enterprise for the purpose of relief in respect of research and development cost, and that the research to be carried out will qualify for any additional tax deductions available. Calculate the post-tax cost of budgeted research and development expenditure. You should ignore the interest payable on loan and national insurance contribution. Tax relief in respect of interest payable on loan. Explain by reference to the loan relationship rules how much of the interest payable on loan will be deductible for corporation tax purpose for the year ending 30th September 2024. Explain by reference to the loan relationship rules. By reference to the loan relationship rules. So I need to talk according to that. Relieving STA limited trading loss brought forward. Explain the extent to which STA limited budgeted loss carried forward as at 1st October 23 can be relieved against the profits of STA limited and or Ridge limited for the year ending 30th September 2024 and summarize your findings. And summarize your findings. Refund of corporation tax. Summarize the matters we should consider in relation to the refund received by Ridge Limited. B. ELA personal tax matters. Prepare graphs to be included in a letter which should address the following issues. Sale of commercial building. I can confirm that Ella is domiciled in the UK. She was non-resident for the period from 6th April 20 to 5th April 23. From 6th April 23 to 30th, she has no ties to the UK for the purpose of determining the tax resident status. In addition, Ella only income which will be subject to UK income tax in the tax year will be her salary from STA Limited. Explain by reference to Ella resident status for the tax year 23-24 why the sale of commercial building will not result in a UK capital gains tax liability if Ella were able to sell the building prior to her return to the UK. So I can tell this is something which we have already discussed while reading the question, that if she dispose of the building before coming back to UK, there will be no UK CGT implication. Your analysis of ELA tax resident status will need to take account of the workings of the split year basis. Calculate the CGT which would be saved as a result of this strategy. IHT payable in respect of gift of land, calculate the IHT payable by ELA as a result of death of her grandmother. You should include an explanation of the relevance of the gift to ELA brother on 1st March 2014. You should include an explanation. Okay, guys, be vigilant about one thing. You guys are supposed to make memorandum for complete question or part of the question. Paran, complete. Why, Anas? I think so. If you look, guys, and that's a bit technical point. Not technical, this is something which needs to be take care of. Rich Limited, corporate tax matters, prepare a memorandum. B, ELA, prepare paragraphs to be included. Everyone, memorandum is only for part A, not for complete question. Is this thing clear? Is this thing clear? It is only for part A. Okay. Let's start writing the answer. For The client file. Client, which limited. Subject, corporate matters. Prepared by. Dated. Manager. So one down to manager is generally one post-tax cost of the planned post-tax cost of the planned research. I can confirm Bakhtavar, let me look over here, please. I can confirm that Rich Limited is a small medium enterprise for the purpose of relief available in respect of research and development cost, and that the research to be carried out will qualify for any additional tax deductions. Available. Calculate the post-tax cost of budget research and development expenditure. You should ignore both NIC. So if I look into the requirement, what is to be precise the requirement? Is it basically tax relief they are talking about? To be precise, what they are talking about? What, to be precise, they are talking about? Calculate the post-tax cost inclusive of tax. R&D inclusive of tax. Okay, so inclusive of tax, R&D inclusive of tax, post-tax, like after deducting tax relief, what will be the net cost type of thing with respect to R&D? Just a sec. Sorry. So post-tax means like after tax, what will be the net cost type of thing, right? That is basically so. What to do with this? With this RD and C. So first of all, we need to look what is the qualifying expenditure, right? First, we need to figure out what is the qualifying expenditure. And after qualifying expenditure, then we'll decide how much is uh, after tax cost and how much is not after tax cost. Okay. So for this looks to be calculative. Mm, the post-tax cost, the post-tax cost of the budgeted research and development expenditure, of 150,000 days, XX amount, refer working one, refer working one, refer working one at spreadsheet. Post-tax cost of planned research. Cost of research was 150. Of this, how much cost is eligible for uh, enhanced, like what is qualifying expenditure? So this is 150. This 150 is 50 for wages, 10 accessible non, taxable benefits, qualifying expenditure. Qualifying expenditure includes wages by the amount 50, after wages, non-cash benefits. Are we supposed to include non-cash benefits? Sorry, limitations of work home. Materials, is it qualifying expenditure? So I'll take simple 65%. That's a very good point, Anas. I'll mention that there is nothing mentioned about uh, assume that subcontractor is guys, I'm waiting for the non-cash benefits feedback. Is it allowed? Yes, no. Why not allowed? Very good. So since it is not directly attributable, that's why it is not allowed to be deducted, right? So my qualifying, yeah, Rubat, we can assume, but for that assumption, I should have much more level of details, which is not available in the question, like how much payment, what are the payment done, what is supposed to be done, all these type of stuff. I can tell you why this happened, and uh, yes, then we can, and this is what I'm going to address. Since this paper is of, if you look, September, December 23, and in September, December 23, there is no such concept. So that's why we can see this disconnect. Otherwise, if we look any of the latest paper, let's say any of the exam kit paper, this thing will not be a consent thing, or this would not be a gray area, I would say. So this is my qualifying expenditure. Mm, expenditure on R&D, 150,000. Then some amount to be RDE, research and development expenditure credit. Credit would be on the base of qualifying expenditure. Expenditure credit to be recorded as an income. Net of RDEC expense. Oh, this one, sorry. Net of tax cost of RDE would be 112,500. Anas, should not directly 112,500 would be allowable expense. So first of all, allowable expense would be 150,000. On this 150,000, you will get RDE credit of 20% of expenditure, qualifying expenditure, which is 22750. So your expenses, your trading impact on trading income your impact on trading income would be by this amount, 127250. Okay. Then after this 127250, I'm like, this is increasing my expense. My profit would be down. As a result, my tax should be saved. So tax should be saved by okay, Aisha, let me try to explain with the help of this working. In RDE, research development expenditure credit, RDEC, in RDEC, the few important things takeaways are then to be very honest, Anas, Farhan, we are discussing it very late. Ideally, it should be discussed maybe last Saturday or before when we were discussing the queries. It's very late to discuss, but it's never too late. I can give you a walkthrough with respect to this question. So if I look into this question, there is a research and development carried out of 150,000. Okay. Under RDE credit, research and development expenditure credit, 20% of the eligible expenditure. Now, what is eligible expenditure or qualifying expenditure? Wages, salaries, non-cash benefits excluded, subcontractor 65%. Subcontractor has some further granularities that the subcontractor is connected or unconnected, different implications. But here I assume that the subcontractor is unconnected. Materials qualifying expenditure. Uh, of this qualifying expenditure, 20% is the uh, tax credit. Sorry, 20% is to be recorded as your income. Okay, 20% of this amount to be recorded as your income. So what I did is, whatever is my actual R&D expense, from this actual R&D expense, I deducted the 20% of qualifying expenditure. So I am like, my expense is 150. My credit is 22750. As a result, net of research and development credit expenses by the amount 127250. Are we clear till 127250? And this is what I mentioned, like this is the amount which will be impacting on trading income. Um, can I have feedback from everyone? Farhan, Sayyid Farhan. Perfect. Now, the requirement is not to calculate any such thing. The requirement is to calculate post-tax, 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 post-tax cost. So I am like, since by this amount my expense is going up, it will lead to tax saving at the rate 25%. Okay. Like expense going up, profit will go down, tax will go down by the amount 31812.5. Then RD credit. So RD credit into 20% into 25% credit directly deducted, deducted, deducted from the corporation tax liability. So I am like deducted RDEC credit from corporation tax liability. So as a result, when I make a sum of these two, I am like, this is my total tax savings. And after this tax saving, so I am like 150 is the cost, 37,500 is the tax saving. So net of tax cost saving is net of tax cost is 112,500. Oh yes, this is the fundamental of RDEC, recorded as an income and then deducted from income tax, corporation tax liability as credit. Sorry. Um, any further thought or question on this? Azan, REIT is from the income tax perspective. REIT dividend recorded as property income, received net of 20% tax, i.e. we receive 80%, but we record gross amount, uh, calculate tax in the normal way and deducted the 20% uh, towards the end. So for REIT, unquoted company loan notes, interest for individuals, both are same. Oh yeah, sorry. Yes, that's correct, Azan. So that principle is same then. Tax relief in respect of the interest payable on loan. Amar, yes, this understanding is correct. By the way, what was the name of the company? Okay. Uh, planned research. Sorry. Interest payable on loan. Yes, interest payable on loan. So if I relook the requirement, explain by reference to the loan relationship rules, how much of interest payable will be deductible for corporation tax purpose. Okay. The interest payable in respect of the loan will be deductible on accrual basis. the manner in which tax relief will be given depends upon how the funds are used. Interest in respect of funds used to carry out research. Research and development research and development for new and more efficient process is trading activity. Accordingly, the interest payable of first October is the loan taken out date and year end is 30th September. So effectively we are talking about complete a year. 150,000 into 8% into 12 over 12. According the interest payable of 12,000 will be deducted from trading income of Ridge Limited. Interest in respect of funds used to acquire shares in STA Limited for purchasing a subsidiary company is not a trading loan. Or not loan, not considered as loan used for trading activity. The interest payable of 950,000 multiply by 8% multiply by 12 upon 12. 950 multiplied by 8, 872, 58476. Interest payable of 76,000 will be non-trading interest income and deducted from non-trading loan relationship rules. Currently, we do not have the interest income figure of Bridge Limited on the assumption that Ridge Limited does not have any interest income. Ridge would have deficit on loan relationship by 76,000. Would have a NTLR deficit can be offset against a company's total profits for the current accounting period. or can be adjusted in prior year or following year total income. Um, Rich Limited, taxable total profits are budgeted to be between 900,000 and 1100,000. Accordingly, the company will be able to relieve the whole of the interest payable on the loan in the year ending 30th September 2024. Sorry, I'm just looking for the comments. I'm waiting to hear any question or feedback. Any point if not clear? Thanks, Anas, Aisha, Rabat. Perfect. Relieving STA Limited trading loss. This loss is to be carried forward as at 1st September 23. And before I start writing, explain the extent to which STA Limited budgeted loss carry forward can be relieved against profits of STA Limited and or Ridge Limited for the year ending 30th September 24. 24, it has profits of 125 trading, 150 total. Last thing, we were planning to purchase the shares on 1st October 23. So let me write the answer into two lines. One is relief against the profits of STA Limited. Relief against profits of STA Limited. Hmm. Any feedback on this before I start writing the answer? Sorry, Aisha missed your question. So if NTLR is in surplus, then it will be recorded as an interest income. Simple. So whenever we saw interest income, that is basically the NTLR income. And NTLR deficit is basically the loss which we are talking about over here. In normal circumstances, STA Limited would be able to relieve 150,000 of its brought forward trading loss against its budgeted taxable total profits for the year ending 30th September 2024. So this is by default. Now, Anas, I will incorporate the point which you are referring. However, the relief may not be available to STA Limited due to the change in ownership of the company. The change in ownership will occur on 1st October 2023 as a result of more than 50% of shares changing hands. STA Limited will not be able, will not be relieve its brought forward against profits arising after the date of change of ownership if within 5-year period in which the change occurred, within any 5-year period of the change occurred, beginning on or after 1st October 2020, 3 years prior to the date of the change in ownership, there is major change in the nature or conduct of its trade. it is intended that changes will be made to the sources of some of STA Limited components, and that the company is to look for new markets. These changes may amount to major change in nature or conduct of the company's trade if they involve a major change in type of services provided by STA Limited and or a major change in STA Limited's customers, outlets, or markets. Relief against profits of Ridge Limited. Before I start Ridge Limited, two comments. So no, Farhan, in short is not appropriate, sorry. So it's like two things, if met together, then it cannot be adjusted. One, change in ownership. Second is change in nature or conduct. Okay. So for example, if conduct or nature of business change, ownership not change, can you carry forward loss? Yes. If only ownership change, nature conduct not change, can you carry forward? Yes. So here my point is ownership is change for sure. Now, if nature conduct also change, then we have a problem. Otherwise, no issue. So we are here, our all conversations are around ownership is changed. That is done and dusted. We are now discussing throughout whether what constitutes change in nature or conduct. Exactly. So this is our point. Like first we discussed principle. What is the principle? And second, we are linking the principle with the scenario. Like your plan is to change uh, survey customers, etc., etc. If anything such happened, then it will be change of owner nature or conduct of business as well. Anas, the 5-year point is uh, after change in ownership, 5-year P. So there is a 5-year window, and the 5-year window. So I can tell you from my own practical experience as well. Change in ownership, it's not a one-day thing. Normally, the discussion, conversations to change ownership takes even years. So that's the point. If if there is a trading loss and there is change in nature or conduct five in 5 years time, and how the breakup of 5 years, it's in total 5 years, but 5 years starts 3 years before change of actual ownership. So the change of actual ownership over here is the change of actual ownership over here is 1st October 23, 3 years before 1st October 2020. So from 1st October 2020, I will look for 5 years. Is there any change in ownership? Sorry, if there is any change in nature or conduct of the business. Okay, so maybe to further simplify, uh, from date of change in ownership, a total time period of 5 years, but it's not only prospective 5 years, it's retrospective up to 3 years. I have to look for 5 years. I hope it's clear. So if you feel and if you notice, not feel maybe is the wrong word. If you notice, we are effectively talking about in total 8 years time, you know. Any one further? Now is it clear? So Anas, 8 year, why I'm saying 8 years? Ownership change on 1st October 2023, right? You have time of 5 years. From which date? Like, I'm planning to change the nature or conduct, and I don't want my loss to be wasted. So how much I have to wait? Anas, how much I have to wait? So it's 5 years from the 1st October 2003, right? So 1st October 2003, 5 years, 1st October 2028, right? But it's like I said, it's not exactly from the date of change in ownership. It's 3 year retrospective applicable. So 3 year retrospective, like I mentioned, 1st October 2028. Keep this in mind. Beginning on or after 1st October 2020. So if there is change in nature or conduct in total 8 years period, how I am driving 8 years period? So if there is change in nature conduct, exactly. So we have to look for total of 5 years, but 5 years within the total of 5 years, 3 year is retrospective. We have to consider. So that is how I am making 8 years in total. So, for rollover, next 12, next 36 months, last 12 months. So what is the total tenor of reinvestment? 48 months. So this is how I am making it total of 48 months. Is it now fine? Okay. Ridge Limited. Ridge Limited and STA Limited will form a loss group from 1st October 2023 as Ridge Limited would own at least 75% of the shares of Ridge Limited. However, because the trading loss of STA Limited arose prior to 1st October 2023, the loss cannot be surrendered to Ridge Limited for offset against the company's profits Ridge Limited point clear? Ridge Limited point clear? ग्राफ है Ridge Limited point clear? Now, I just need to summarize my findings as well. Summary of findings. The maximum amount of trading loss which could be relieved in the year ending 30th September 2024 is 150,000. If the changes to STA Limited trading activities amount to a major change in nature or conduct of its trade, it will not be possible to relieve any of the trading laws brought forward. Last summary of findings. STA laws, STA limited laws cannot be adjusted with Ridge Limited as part of group loss group. Summary of findings. Anything not clear? The corporation tax position of Ridge Limited should be reviewed in order to determine whether or not there is a valid reason for refund. If it is concluded that the refund is made as a result of an error on part of HMRC, the money should be repaid immediately. Failure to return money in these circumstances would be considered as civil and or criminal offense. HMRC should be informed of their error as soon as possible in order to minimize any interest and penalties which may otherwise become payable. If for some reason Rich Limited is unwilling to return the money, we would have to so my friend HMRC errors would always be same consequences. They would not be changed. Whether it's Hiromi, whether it's Rich Limited, whether it's you name anyone, whether it's Qunber Raza, whether it's Anas Ansari, everywhere it would be same. Consider ceasing to act as advisor to the Rich Limited group. We would then have to notify authority that we no longer act for the group, although we would not provide them with any reason for our action. We should consider the need to make a report under money laundering rules to money laundering reporting officer. Adhan, so to be honest, I simply mentioned 6 points. 1, 2, 3, 1, 2, 3. So in total 6 points. So make it 1 point extra. Then rest of the 5 points are there. Um, any question? Should we start part B of the question? Part B. Please prepare paragraphs to be included in letter to Allah, which should address the following issues. Sale of commercial building in the country of Korea. Okay. I can confirm that Ella is domiciled in the UK. She was non-resident for the period from 6th April 20 to 5th April 23. From 6th April 23 to 30th September 23, Ella has no ties to the UK for the purpose of determining her tax resident status. In addition, Ella only income which will be subject to UK income tax in the tax year 23-24 will be held salary from STA Limited. Explain by reference to Ella resident status for the tax year 23-24 why the sale of commercial building will not result in UK capital gains tax liability. If Ella were able to sell the building prior to her return to the UK, your analysis of Ella tax residence will need to be account for the workings of the split year basis, calculate the CGT which would be saved as a result of this strategy. Okay. A profit resulting from the sale of building situated overseas can only be subject to UK CGT if the seller is either UK resident or temporarily non UK resident at the time of sale. In your particular situation, there is no need to consider the rules concerning temporary non-resident as you purchase the building after leaving the UK. Mm, Left from UK on 6th April 2020 and purchased building on accordingly. The profit on the sale of the building cannot be subject to UK CGT unless you are UK resident when the building is sold. So I covered the lines which we were discussing while reading the question still yet. Okay. Um, Nothing new, I believe. If you notice over here, I'm not writing the name of, let's say, Stella. Rather, my main theme is you, your type of wordings, because these paragraphs are to be included in the letter to Stella. So that's why my tone is on these particular lines. Your tax residence status. You would be automatically UK tax resident for the tax year 23-24 because you will be in UK from 1st October 2023 to 5th April 2024, which is more than 183 days during the fiscal year. Effective from the date when you arrive to UK. Tax residence status. This is, to be exact, my last line. If you were to sell the building before return to UK, when you won't be considered as UK resident at time of sale. In that situation, profit arising on sale of building would not be subject to UK CGT. This would save UK CGT of working to disposal proceed 240 and 150. Annual exemption. Guys, be mindful. It is a commercial building. So no 18 or 24, rather it would be 10 or 20. Unless let's do it at the moment. We can discuss it once we are done with this. Okay. Taxable gain 87. Taxable gain 87. It is a commercial property, right? Commercial building. How much of basic rate band is available? Something at the rate 10%, something at the rate 20%. The sum would be like total CGT, and whatever is the total CGT will be the total CGT saving. Guys, her salary would be 7,000 per month for 6 months because she was joining on 1st October and her salary would be on arrears. So first salary she will be receiving on 31st October, November, 31st December, Jan, Feb, March. So she will be receiving salary for 6 times, right? So 7,000 multiplied by 6, 42, on the assumption that she won't have any other income. Personal allowance. So as a result, her taxable income would be 29430. Basic rate band is 37,700. Basic rate band available is Anna's good one, 8270. So 8270 would be taxed at the rate 10%, and rest of the gains would be taxed at the rate 20%. And 16,573. I'm taking a bit pause for your feedback, if any. Thanks, Aisha. Thanks, Anas. Thanks, Robat. After the sale of commercial, inheritance tax payable in respect of gift of land. Calculate the IHT payable by Ella as a result of death of her grandmother. You should include an explanation of the relevance of the gift to Ella brother on 1st March 2014. IHT payable by Ella as a result of death of her grandmother is Gift from my grandmother. On 1st Feb 18, my grandmother gave me a plot of land situated in the UK. This plot of land had a market value of 340,000 on that date. Okay. So market value of the asset transferred is 340. It is part of a much larger site owned by my grandmother, which originally had a market value of 980 immediately prior to the gift to me. 2 months later, my grandmother sold the remainder of the site to an unconnected person for 610. Uh, what is the uh, Anas, part disposal is in uh, capital gains. So it's not capital gains. Otherwise, yes, I have done it in the way. Yeah. Since we are talking about IHT, so for IHT, we have diminution in estate. Before gift, the overall land had a value of 980,000. The after gift portion has a market value of 610. That's why it was sold at 610. As a result, value of asset transferred is 370. What was that 310? What was that? Sorry, 310, 340. What was that 340? So 340 is the market value. And as you are aware, in IHT, uh, more than market value diminution in estate matters, right? Annual exemption for 1718. Again, can I uh, take the feedback from everyone? 370,000 and 340,000. The difference is clear. Okay. Okay, Farhan. Can I have feedback from others? Azan, yes, that's true. Uh, Farhan, so the point I was making is 340 is the market value. IHT, PET, CLT is not based on the market value. It's first based on the diminution in estate. So imagine before gift, the larger plot had a worth of 910. After gift, the remaining plot had a worth of 610. So 340 would be the market value of the plot transferred, I agree. But what is the diminution in estate? So diminution in estate is by the amount uh, 370,000. Unless we discussed while reading the question that it is more than 7 years. No, uh, be clear with one thing. We are not calculating lifetime tax. We are calculating death tax. So that's why I mentioned NRB of death. May 23. So May 23 means 23, 24. This is what max I can do. Taxable amount 39,000. Taper relief. Taper relief would be of the asset was transferred on Feb 18, Feb 19, Feb 20, Feb 21, Feb 22, Feb 23, Feb 24. So taper relief is like 5 to 6 years. And for 5 to 6 years, taper relief would be 60%. IHT on gift of land. It has been assumed that the value of remainder of the site on 1st February 2018 was valued at 610,000, i.e. the amount it was sold for 2 months after the date of gift to you. However, it may be necessary to obtain a valuation by reference to the circumstances as at the date of the relevance of the gift Your grandmother made the gift to your brother more than 7 years prior to the date of her death. Accordingly, this was an exempt transfer for the purpose of IHT and therefore has no effect on the IHT payable in respect of the sorry, 4 comments. So very good, Farhan. Like that is like fine. If you are like perfect for rest of the area, made one error, it's okay. Um, any feedback, please? Um, good to hear. No question. Quickly. So, what's the feedback? Question was, I can tell from my own experience. Section, sorry, part A was more tough as compared to part B. Uh, part A in particular, the area where the things which we are not very much used to of were examined mainly, right? So that's maybe the reason. Uh, Aisha, in that situation, I can just simply say, uh, Anas, the answer is no. Uh, like in this question, the good thing is you guys noted the way to write pro forma, and if you notice, that's very important thing which I want to highlight. If you notice in the letter, my generally tune was about you, you, your. Whereas if it's memo or if it's notes to the client file, then probably instead of you and your, I would have mentioned the name of the client. So that's the difference, one of the important difference. Um, Aisha, mixing up the concepts, the only way is to increase the practice. Like I can tell there is no other way. And I'm aware that other exams too just wanted to know if, oh, my friend Farhan, uh, I'm going to share your comment with everyone. So this is the question of Farhan, and this is the question of Farhan. From the examiner perspective, if I made one mistake, obviously the answer will be different, but would I get the rest of the marks or all of the marks would be deducted? So I can tell you the only, so let's say there was half mark or 1 mark to calculate the diminution in estate. Only your half or 1 mark to calculate the diminution in estate would be deducted. If let's say that was of 5 marks, you will get 4 marks for sure. So nothing to worry around. And that's not with the ACCA. Even that happened with my daughter. She had her uh, school test, and while copying the question from the board, she mistakenly wrote 31 instead of 13. She solved the question accordingly. Her teacher deducted half mark of copy mistake. Other than that, no marks deduction. So it's not own figure rule, Rubat. So it's like if there is an error in any one step and other steps are fine, so you'll get the mark. So that is the point. Uh, how you get 2 dots in? Oh, sorry, Amar, 2 dots in A4. This one maybe. Amar, so if you increase intent, let's say if I increase intent over here, I will get third type of dot. Is it clear? So, at times, and in fact, I can make it in this way as well, just for your reference, Summer. 1, 2, 3. I can make it in this way as well. So it's like first bullet, sub bullet, and for third sub bullet, there are pointers. There is 1, 2, 3. Anything further, guys? If I decrease the intent, further decrease. Is it done? Anyone want to ask? Anyone want to discuss further? Do let me know. Otherwise, good to close. I'm not sure about you guys. Can at least tell about myself. Enjoyed the question. Question was good. Uh, Last not the least thing from my side. Anas, uh, in the meanwhile, having word with you guys. I already saved it, and this file already uploaded a drive as well. So the name is Ridge and STA Limited, name of the file. So if you access the drive right now, you will get it. Um, so I was like, we will be having next Saturday, Sunday classes. Uh, we'll be doing questions, practice questions, similar type of this. Uh, that's it. So again, if you want to table anything for discussion, please do table. Uh, Otherwise, we'll be doing questions next week. I hope, and maybe for next week, we pick up the latest paper. So this time we picked up the old papers. And but next time, next Saturday, Sunday, uh, maybe next Saturday, Sunday, obviously we might be able to do one complete paper. And in that time, maybe we attempt June 25 exam, because one of the limitation with the June 25 exam is the answers of June 25 would not be available uh, at anywhere. I can tell anywhere. So that's why that's the idea. So Amar, for next Sunday, I can keep it in morning, but for next Saturday, I really don't like to change the time. Uh, if Anas do share, yeah, Aisha June 25 exam. So Anas, if there is any such question, do share with me. I can have a look. Like if it's good, we can do it. Do share with me. Okay. So thank you very much. I got we got late today, but that's fine. Good to learn the question. Good to see the question. For sure, Anas, do it. Thank you. Thank you, everyone. Take care. I wish maybe if I'm not wrong, I can say good night. Otherwise, back to studies after having some break. Take care. Love is.